All right, guys, so with the month of September officially behind us, it's time to look back, see how our portfolios did, and use that as some motivation as we get into investing in this month. So in this video, I'll go over how much I made in September, all the buys and sells I made, a little bit about the dividends, and the goals I have for my portfolio for the month of October. But before we get started, make sure you leave a comment below about how your portfolio did. And most importantly, let me know what you plan on wearing for Halloween. What are you gonna dress up as? Because I'm still trying to figure that out. Maybe I'll just, steal an idea from you guys. Okay, so September for me ended pretty well. For the month, my portfolio went up 3.78%. And in year-to-date comparison, my portfolio is up almost 28.5%. And then all time, I'm looking at 46.3%, which is great. I've said a past couple of months on how I'm really excited to get closer and closer to 50%. I think that's a real testament to just how even if you're investing a small amount, like $30 a week, for example, what I'm doing, that over time, being consistent and investing into the right things, you can build a very nice portfolio. But of course, it's all about investing into the right things. And that's where the buys and sells and transactions like that come into play. So I was a little more active this month in comparison to last month on actually selling some positions. I think the overall theme was getting rid of positions I wasn't investing into. And there were reasons I discovered behind both positions I sold. Starting with Yeti, I sold my entire position in that, which was 2.33 shares at about $39.72 per share. The first reason I sold my Yeti position is, of course, I wasn't investing into it. I hadn't invested into it since maybe shortly after the pandemic kind of took its end, I guess, with the stock market around late 2021. And at that point, I had invested what I didn't know at that point was going to be about a high of like mid to late $80 a share. So at this point, it's almost $40 a share. I didn't anticipate me being able to recover. So I wanted to cover my losses and maybe put that money into something, especially something dividend paying that I can make more money off of passively and actively in the long term. With that same mindset, I actually sold my entire position in Amazon. I know I say entire, it's actually not a lot, just right at 0.89 shares at about $191 per share. This isn't necessarily a bad position as far as long-term volatility. You can probably make a lot of money off of it in the long term since Amazon kind of has its hands in a lot of baskets. But again, I wasn't investing into it. And the reason behind that was more than likely just because I was taking my money and putting it into other positions I found were more important, long-term dividend growth and overall long-term growth positions. And maybe I do need to look more into understanding the financial side of Amazon. I understand the company well enough. I buy a lot of things from them, but I think in order to be comfortable and confident with the position you're investing into, you really do need to understand the financials behind them. So maybe I'll revisit Amazon again. My thing this month, as far as what I ended up buying, was less about getting the high dividend yield positions, but more so investing into positions that had high long-term growth opportunities. Starting with NVIDIA, I bought a little under 0.3 shares. At that point, NVIDIA's share price had dropped despite releasing a positive Q2 earnings report, beating all expectations. I think the day after they made those announcements, NVIDIA dropped at most by 7%. So it was pretty crazy. I'm still a long-term believer of the company, especially with their impact on computing data centers and primarily, most importantly, artificial intelligence, especially what's going on in the world right now. And with the news of their Blackwell architecture starting to ship out at the end of Q4, I really believe that that could result in the share price of the company increasing as the demand of their GPUs and things like that increase. I also invested in about half a share of Williams-Sonoma. I really wanted to load up on a stock that had some really positive long-term growth history along with its dividend history. I believe they increased their share price between 60 to 80% last year and a few 100% over the past 5 and 10 years. And their 5-year compound annual growth rate is at about 17%. So I'm really expecting dividends to consistently grow every single year. My goal is to actually own at least 2 shares of Williams-Sonoma, considering how much I invest in their share price. That's a goal that I feel is a really good one. Hopefully I can accomplish that by the end of the year. And to round it out, I finally added more into my Costco position, added a little over 0.3 shares. That was about $300. I actually used the funds from Amazon and my Yeti sale to actually contribute into Costco. Similar reason as Yeti, they have a great long-term share price growth history along with the dividend history. And of course, it may not be the greatest reason at the time being, but I really do like their special dividend history, even though it's not every single year as I would prefer or as consistent as a position like Main Street Capital. It does appear to happen every couple of years when they have such an excess of money and decide to distribute it back. And I took advantage of it this year, so hopefully I can build on that position and take advantage of it in the future. So here is a quick dividend update. So for the month of September, I ended up making $29.03 in dividends, and that puts my annual income so far at $242.12, which again is really cool because that's not too far from my overall dividend income for 2023. So a lot of growth. Really cool. On top of that, my running average at the moment is $26.90 per month, so not bad at all. And I've said this many times, one thing I really like doing just to keep myself being motivated as someone that doesn't invest a lot is looking at my future potential on dividends and knowing that every time I invest money into my portfolio, that potential increases. But as of the end of September, my portfolio could potentially pay me about $703 per year starting 5 years from this point in time, $1,335 per year 10 years from now, and then 15 years from now, it could pay me $2,381 a year. And I mean, that's a rent, maybe a mortgage or a car note and something like that. So thinking about that and knowing that it could progress it's really cool. My goal this year overall has been to try to trim down my portfolio. I think when I started this year, my portfolio consisted of maybe 47 or 48 different positions. And I don't necessarily mean that the less positions you have in your portfolio, the better, but I do believe that if you understand every position that you have, then that makes it easier to maintain your portfolio. And I've been honest by saying that a lot of the positions I had, I was just starting off investing and I was watching YouTubers and selecting different positions, which is fine, but I wasn't actually doing the additional research that I should have been doing. And with that, I didn't fully understand all the positions I had even up until this point. But more specifically for this month, I don't necessarily have a strategy on the breakdown of the type of stocks and ETFs that I would like to have. Like for example, maybe having a portfolio that has 50% ETFs, 25% growth stocks, and 25% high yielding stocks. I don't have anything like that, but I think I want to use this month to actually look through my portfolio and see what I've subconsciously created and get an idea of what type of investor I want to continue being and then go from there. But with the portfolio I have now, everything has been going pretty well so far, especially with the dividend payouts. Those are consistently growing, and I actually made this video here to discuss the updates dividend wise on my portfolio for the month of September. I'm going to elaborate a little bit more, including the positions that paid me and how all this compares to the years in the past. So if you guys are interested, make sure you check out that video, and hopefully you guys enjoyed this video. And until next time, as always, take care.